from our perspective, we know when banks come to rediscount their bills because they need some additional liquidity. Or when they come to various windows, like the overnight or something like that. That shows that they're under strain. Or you could also think about the repo market, the reverse repo. Now, they don't use one specific channel all the time because, again, they have a responsibility for liquidity management. So I think the point I'm making is it's a qualitative number. It's a qualitative assessment. So, I mean, when a particular bank comes once, that doesn't mean that it is short on liquidity. Maybe it just was poor in terms of today it is short, but you know, it just did a poor job in managing it today and doesn't want to be slapped on the hand for the CRR violation. You understand what I'm saying? So it's more that. But that notwithstanding, yes, I can tell you that liquidity, let's say at the end of 2015, the number I had quoted for you, well, was 38.1%. And that compares to the overall number that I quoted just now, which has gone up to 40.5 in April and 41.6 in May. So those are the numbers that I would want you to sort of consider more than anything else. In terms of other things, KBRR, yes, the KBRR was adjusted, as you correctly say. But the point is that adjusting it doesn't wipe away the problems. What obviously the MPC did not want to do is not to adjust the KBRR and wait, you know, for manna to fall from heaven, you know, kind of thing, with the new KBRR. It's a much more prudent way to adjust it now, and even though we know it is a bit problematic, and then put in place another one, I want to just call it another system, or another system that deals with this issue without the problems of the KBRR, and hopefully not create new ones. And then thirdly, yeah, you talked about the moratorium. Yes, the moratorium is in place, and we don't have a timeline to lifting the moratorium. I think we explained why we have the moratorium. The moratorium is in place to do primarily two things. One is to allow the central bank to strengthen or give them space to adjust in a broad way its bank supervision, the way we do bank supervision. And secondly, also to give commercial banks room to strengthen, to think through and strengthen their business models. Those are really the two objectives. Now, that doesn't mean we are going to wait until everybody has done what they, no, we will be quick. We are not going to be, let's say, unnecessarily slow in this area.